Welcome to our comprehensive USD CHF analysis report covering September 22-27, 2025. In this presentation, we'll examine the recent price action, technical levels, and market sentiments surrounding the Swiss franc against the US dollar. We'll analyze data from multiple trusted sources to provide you with actionable trading insights and recommendations. By the end of this presentation, you'll understand the key support and resistance levels, potential trading opportunities, and risk factors affecting this currency pair. Let's dive into the analysis prepared by our expert team at FXtech. For this analysis, we've gathered information from 5 leading financial platforms to ensure comprehensive coverage. TradingView provides us with accurate price data and technical indicators. investingLive, formerly known as FXlive, offers valuable technical analysis and market commentary from experienced traders. ActionForex.com contributes detailed market analysis and weekly outlooks that help us understand broader trends. Forex.com delivers fundamental analysis and market forecasts based on economic factors. Finally, DailyForex supplies daily technical analysis and specific trading signals. By synthesizing insights from these diverse sources, we can present a well-rounded view of the USD CHF pair's current position and future potential. Let's examine the current market data for USD CHF from TradingView. As of September 27, the pair is trading at 0.7982 Swiss francs, showing a daily decline of 0.17% or 0.00136 points. The day's trading range has been relatively tight between 0.79734 and 0.80073. Looking at the broader performance metrics, we see mixed signals with a positive one-week performance of 0.36%. but negative returns across longer timeframes. The 1-month performance shows a 0.51% decline, while the 6-month and year-to-date figures reveal more substantial losses of 9.28% and 11.95% respectively. This long-term downtrend suggests persistent Swiss franc strength against the dollar, though recent short-term stabilization may indicate a potential correction. investingLive's technical analysis from September 23rd, authored by Greg Mikolovsky, highlights a critical technical battle in USD CHF. The pair is caught in a tug-of-war between buyers and sellers, with price action contained within key technical levels. The 200-hour moving average at 0.79296 serves as critical resistance, with sellers repeatedly defending this level and capping upside attempts. Meanwhile, the support zone between 0.79104 and 0.79209 has attracted buyers, preventing deeper declines. This technical standoff creates a clear trading framework. As long as price remains below the 200-hour moving average, sellers maintain control of the market direction. A decisive break below support could trigger accelerated selling, while a breakthrough above the 200-hour MA would signal a potential shift in momentum favoring buyers. ActionForex's weekly outlook from September 27th provides valuable insights into USD CHF's technical structure. The analysis notes that the pair's rebound from the 0.782 short-term bottom extended higher last week, but lost momentum after hitting 0.8013, turning the initial buyers neutral. Looking at potential scenarios, a sustained move above the 55-day EMA at 0.8016 would suggest that the rise from 0.7828 is correcting the entire fall from 0.92, potentially targeting the 0.817 resistance level. Conversely, a break below 0.7908 would shift buyers back to the downside, likely retesting the 0.7828 low. From a long-term perspective, the downtrend from the 2017 high of 1.0342 remains intact, with the next target at 0.7382. This bearish outlook persists as long as the 0.8332 resistance level holds. DailyForex's analysis by Christopher Lewis from September 24th presents a bearish bias for USD CHF. The report identifies key support at 0.79 and resistance levels at 0.8 and 0.81. Lewis emphasizes that the 0.79 level is providing significant support, while a major downtrend line backed by the 50-day EMA creates formidable resistance overhead. The analysis warns that a break below 0.79 could trigger a move down to 0.78, extending the pair's downside momentum. Conversely, a break above 0.8 and the 50-day EMA might signal a potential trend change, though this scenario appears less likely given the current technical structure. The overall assessment aligns with other sources, confirming the prevailing bearish sentiment while acknowledging key levels where the market could potentially reverse. Understanding the key technical levels is crucial for trading USD CHF effectively. On the resistance side, we have four important barriers. RON at 0.8, a strong psychological level. R2 at 0.8013, the recent high where upward momentum stalled. R3 at 0.8016, the 55-day EMA that's critical for confirming a trend change. And R4 at 0.817, a major resistance target. For support, we're watching zone at 0.791, identified by investingLive as a key support zone. STU at 0.79, an important psychological support level. And 3 at 0.7828, the recent short-term bottom. These levels create a clear framework for potential trade entries, targets, and stop-loss placements. Monitoring price action around these levels will provide valuable clues about the pair's next directional move. Based on our comprehensive analysis, we've developed trading strategies for both short and medium-term horizons. For short-term traders looking 1-2 weeks ahead, we recommend a short strategy with entry points between 0.8, 0.8015, targeting 0.791, 0.793, with a stop loss at 0.805, offering a favorable 1-2 risk-reward ratio. Alternatively, a long strategy could be considered on a decisive break above 0.802, targeting 0.81, 0.815, with a stop loss at 0.798. For medium-term traders with a 1-3 month outlook, we see a 65% probability for a bearish scenario targeting 0.78, 0.79, driven by continued global economic uncertainty, a neutral to hawkish S&P stance, and USD weakness. The alternative bullish scenario has a 35% probability, targeting 0.8 to 0.83, which would require improved global risk sentiment, a dovish S&P shift, or renewed USD strength. Before implementing our trading recommendations, it's essential to understand the key risk factors that could impact USD CHF. Upside risks include a potential hawkish shift from the Federal Reserve, easing of geopolitical tensions, reducing safe haven demand for the Swiss franc, and stronger than expected US economic data. Downside risks involve escalation of global trade conflicts, increasing safe haven flows to the franc, deteriorating US economic data, and possible S&P intervention. To trade this pair successfully, we recommend strict risk management practices. Implement stop losses limiting risk to 2% per trade, adjust position sizing based on volatility, and stay informed about central bank announcements and economic data releases. Remember that market conditions can change rapidly, so remain flexible and prepared to adjust your strategy as new information emerges.